Good evening, and welcome to the AlgoIndex market close for Wednesday, July 8th. Today was a narrow, tech-led recovery. Stocks opened under pressure, sold to the session lows by mid-morning, then climbed all afternoon to finish near the highs. The S&P 500 closed at 7,482, down about 0.25%. The Nasdaq 100 finished green, up roughly 0.33%. And the volatility index jumped almost 5% to 16.9. Here is the closing scoreboard. The S&P 500 settled at 7,482, off 0.28%, with a full-day swing of nearly 0.9%. The Nasdaq 100 went the other way and closed up 0.28%, led by a late recovery in the largest names. The volatility index rose 4.65%, to 16.89. So traders paid up for protection even as the index recovered. But under the surface, breadth was firmly negative. This was a rally carried by a few heavyweights, not the broad market. So, what drove the session? First, semiconductors stayed heavy after a rough stretch, and that weight on the highest beta names capped the broad index early. Second, dealer positioning kept dips supported, with the 7,500 area acting as the magnet all day. That is why the morning washout got bought back so quickly. Third, after the close, fresh Middle East headlines reignited energy risk. Crude oil pushed higher, energy firmed, and gold caught a bid. Now, the levels that actually mattered. The morning sell-off washed the S&P down to a base near 7,420, right where the deeper support band sat coming into the day. From there, buyers stepped in. Price reclaimed 7,470 and pressed all the way back to the 7,500 pivot. The push extended to a session high near 7,527, just under the 7,520 to 7,560 resistance shelf, which was never seriously challenged. Then, it faded into the close, finishing at 7,482, just beneath the pivot. The map is clean: 7,500 in the middle, 7,470 and 7,420 support below, and 7,520 to 7,560 resistance above. And here is our desk today, the part nobody else can show you. Our systems traded 0 times, and that was the right call. The AI options system went into the morning with an overnight setup, a call position tied to the 75.59 area on the S&P. Price never returned to that trigger. The day high stalled near 7,527. So the setup auto-canceled at the open, and we stood aside with 0 risk taken. The ES SPY strategy never got a clean signal either, because the morning washout and V-shaped recovery did not line up with a valid entry window. No trade is a position. On a choppy, headline-driven day, protecting capital and waiting for a real edge is exactly what a disciplined system is built to do. Looking to Thursday, July 9th, it is a lighter day today. We get weekly jobless claims at 8:30 Eastern, remarks from Fed officials Williams in the morning and Logan in the early afternoon, and a 30-year bond auction at 1 p.m. No first-tier economic reports and no mega-cap earnings on the schedule. The bias is neutral, with a mild upside magnet. The nearest options concentration sits at 7,500, just above where cash closed. Watch 7,500 as the pivot, 7,470 and 7,420 as support. 7,520 to 7,560 as resistance. And keep one eye on the geopolitical headlines, which can move energy and volatility fast. That is your market close for July 8th. If this helped, the best next step is our free AI trading journal at members.algoindex.com. Check our gamma level accuracy tool and the full write-ups on the blog at algoindex.com. And join the community on Discord. Same time tomorrow. Trade well and stay disciplined.